The Canadian housing bubble is absolutely imploding, and the major risk here that anybody can see is the fact that the condo market is so fragile and so much subprime lending has gone out into that market to these risky developers. But before that, let's just take a listen here to what is going on and some of these stories that we keep hearing about the imploding housing bubble. So when properties can't sell because their owners are drowning in $250,000 to $300,000 of underwater mortgages, 2 Toronto beaches listings sat dead. So let's take a listen to this. Properties can't sell because the owner is underwater. Wondering what people's thoughts on this are. I've been looking for 2 houses in the beaches, and in the last few months saw 2 homes that couldn't sell because the owner is underwater on them. One, it was a private sale. I'll keep the address confidential. Covering the mortgages and closing costs would have been $250,000 to $300,000 over the value. Owner has to move in and rent bedrooms on Airbnb. I mean, what a disaster when you really think about it for them. The other, 12 Lark Street, accepted an offer, then couldn't close because the proceeds from the sale didn't cover the mortgages. Now the second position mortgage holder paid off the first mortgage and is reselling. I'm pretty shocked that out of 4 or 5 houses I've looked at, 2 literally couldn't sell even if they wanted to. Are these just outliers, or is this the tip of the iceberg? Is more of this coming? And I think it's fair to say more of this is coming. Take a listen to this.
Sales in some major Canadian markets are continuing to drop to lows not seen in decades. It has some condo owners looking to offload their properties, worried that things will only get worse.
And you've just got to think, worried that things are only going to get worse. I mean, that's the fear starting to come out into the market. And it's going to first come out slowly. It's going to be those people who are smart enough to read the market and just say, holy shit, we need to get the fuck out. Like John Flynn has been warning for years and years and years, and I've been warning too.
And on the other side of the coin, sellers, you got to sell because it's not your market. Take what you can and sell that thing.
Yeah, well, you heard him, guys. People need to get out because things aren't looking like they're going to improve. You've just got to look at the economy.
It'll be painful.
You've just got to look at investment into Canada and people's appetite to invest in these shit boxes. It's just not there anymore. And then this, a downturn that is really starting to wreak havoc. New condo sales in GTHA continue to decline as developers cancel more projects. But when you get into the finer details, it looks even worse than that for the developers. So the greater Toronto and Hamilton area new condominium market just saw 502 sales in the last quarter, prompting one real estate analysis firm to speak out about what it says is a downturn that really is starting to wreak havoc. The firm said that 502 new condominium units that changed hands in the second quarter marks a 69% drop compared to the same time last year and represents a 91% drop compared to the 10-year average. That is a complete crash in sales. And they even say here, the market has entered a phase of the downturn that is really starting to wreak havoc. Project cancellations are mounting, construction starts are collapsing, jobs are being lost, buyers are losing a lot of money, and developers are facing difficulties with closing.
We're seeing situations where there's up to 30% failure rate amongst closings.
And I've had a number of you reach out before and say that you work for developers in and around the GTA, and you were encouraged by them to buy into these projects. So people who were working in these projects and are losing their jobs, they were fucking told, hey, this is a great investment. You should fucking buy in here. And now, like, they're losing their job and they can't afford to close on the project either. A lot of projects are being cancelled. Developers are going under. But the major risk here that a lot of people don't even talk about is the fact that Canadian banks have been writing excessive amount of loans to these risky developers, considering just how risky they are. I mean, even me and you, like, we can work it out very simply. But the banks, they know this. They have risk departments that monitor these things. So why the fuck are they lending this amount of money? We're not talking about small amounts of money here. $85.1 billion is not a small amount of money. That's way, 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 way higher than their loan loss provision. So it has potential that if 10, 20% of these loans go bad, it would wipe out all the loan loss provisions that Canadian big banks have. So that goes to show the scale of this crisis and how quickly it can go from bad to worse for the banks, because the banks are extremely leveraged in Canada. They don't have loads of cash on hand. That's why they don't want to give you cash when you go and request it.
What is this? It's my money. I'm allowed to withdraw from my own bank account.
Yeah, so
You said that what's the maximum limit you can give a withdrawal to a customer? It's $3,000 on the day. You've already mentioned that multiple times.
Yeah, not today.
Why not today?
All their money, it's money on the computer screen. It's money that they've created into debt and lent out into existence. So they hold a lot of debt. They hold a lot of liabilities. But the fact is, when you look at what they're doing with lending, it makes no sense. But we know why they're doing this, because they have to. Because if these developers go under, they are screwed. So they're lending more into it, thinking this is going to fix the problem, and probably thinking, oh, let's just kick that can down the road because the government does that all the time, and it works so well. The economy is booming. That's what the Prime Minister said.
Our economy is very strong.
So, when we come in and ask for a bailout, we can just say, oh, well, you said the economy was great.
Our economy is very strong.
It's just an absolute disaster in the making that is so obvious and in plain sight, and people just aren't talking about it much. And there's obviously a huge influence here. Better Dwelling is talking about it because they're independent. But if you look at most of the financial media, they don't want to talk about it because a lot of their sponsorship money and things like that are coming from those big banks. So they're heavily influenced. They can't criticize what they're doing like that because then they're not going to get that advertising revenue. So there's all these conflicts of interest in the industry, and that's why we're here doing this. And it comes with this, and I just think this is not a coincidence, guys. Ottawa considers hiking bank deposit insurance limit to $150,000. US bank failures are among the reasons cited by the Department of Finance. That's interesting, isn't it? Because I thought the Canadian banking system was just rock solid. So why on earth would you want to hike deposit insurance if you're never going to have to rely on that insurance anyway because the banks are so rock solid? So a lot doesn't add up, and just the timing of all this with what's going on with the banks, just lending to all these risky entities out there is just absolutely crazy, and they are going bust. There's absolutely a load of these going bust. We covered one last week that went bust, and you've just got to think with the one last week that went bust, they didn't really know how much money was really owed. There was one loan that was way more than the value of the real estate, but they didn't really know. Take a listen to this from last week. So you basically got a property right now that is worth here around $38 million, and there's currently at least $91 million owed on it. I mean, this just goes to show the level of leverage. Who lends that much money when the property is only worth $38 million? So again, what's going to happen here isn't really clear. And if you look at what Woe's put on X here, it's really interesting because it's going back to the 90s crash to show you just how bad things can get here. And basically, you can see back in 1991, this house was going for $1.2 million. And then it was listed in 97 for $309,000 after being listed pretty much every year and just going down and down and down and down. So you can see that these downturns can last a significant amount of time, and you're already way over what you had in 2008 for a decline. We're 3 years into this. So this likely isn't a short thing that's going to happen, and that's what people fail to wrap their head around. They're so used to these fast moves in things like the stock market that they think things are just going to turn around fast. They're just going to head to all-time highs like the stock market is. But it just doesn't work like that when it comes to housing and real estate in particular, because it's dependent on banks. It's dependent on lending. People are buying on margin, and that's the major difference which happens in the real estate market. People aren't buying with mostly cash. That's why debt is at an all-time high in Canada. And then TD Leaker posted this on X as well. 50% off off. So this guy has basically been listing here. So it started 2025 here, 2.6 million, and they've just been reducing the price pretty much every month here until now, where they've got to 1.4 million from 2.65 million. So that's why he's saying 50% off. So it's absolutely insane. And obviously they bought, actually, if you look at Woze's X post there, at nearly the bottom in the 90s crash here for 292,000. But you've got to think inflation from 1996 to 2025, you know, it's probably just about kept pace with that. That's if it sells for 1.4 million. And the other thing people have got to look at is the cracks are widening in terms of wealth inequality. And take a listen to some of these stats because they're absolutely insane. Disposable income for the bottom 20% of the income distribution in this country grew just 3.2%, about half the average growth and the weakest of any group. Moreover, the gain was mostly driven by a 30% rise in net transfers from the government support and reduced taxes, said Moody's. Average wages slipped 0.7% and investment and earnings declined. So just think about what that really means. And then this is really the most shocking thing that I read in this report. According to the latest data from StatsCan, the wealthiest 20% of households now hold 68% of financial assets and 51% of real estate. So again, that top 20%, everything is structured in their favor. Those are the people that have the most political influence in Canada, and those are the people that ultimately their mentality needs to change. The stability of society actually is dependent on some sort of growth for everybody. It hasn't got to be exactly the same, but you can see how in the past where you've had periods of growth and it's been shared where, you know, CEOs haven't been earning 192x what the average worker is earning, and they've been sharing the prosperity of the company, that leads to more productivity, that leads to generating more ideas, that leads to a better society with less crime and where people want to have kids and start and raise a family, where people can afford a home. But what's happened is wealth hoarding now. So the CEO earns 192x what the average worker earns. The average worker is paying like 40% taxes. The CEO is paying 50% taxes. And the CEO is buying all the real estate. They're buying all the assets, whilst the average worker is living paycheck to paycheck. I mean, until people realize what is going on in the system, they're just not going to know. And then I want to show you this clip real quick. Listen to this, because this money laundering scam is basically how it's going to work moving forward. And this is for the UK, but it's exactly the same in Canada. So take a listen to this.
Total government deficit is since the beginning of COVID.
About 100 billion or something?
$1 trillion. It's £1 trillion, which is £20,000 for every adult in the country. It's an unbelievably enormous number. Really, nothing economically matters except for that number because of the enormous scale of that number. We knew at the beginning of COVID, the government was going to pump maybe not $1 trillion, maybe $500 billion into the economy. If you are going to pump £500 billion from the government debt into the economy, you have to ask who is going to end up with that money, who is going to accumulate that money. And the most amazing thing happened during COVID, which was that nobody asked. So I did the analysis, right?
Same in Canada.
Government pumps this money in. Where does it go? Furloughed workers. Do furloughed workers get richer? No, because they just have to pay. They're not getting their wages anymore, right? They pay their bills.
And that's the same thing happened in Canada with the wage subsidy.
They pay their mortgage. It goes to the owners of the houses, the owners of the companies, rich people.
Which are the banks, ultimately.
Well, ultimately, it's rich people. And what do rich people do with the money during COVID? Nothing, because they can't spend it. What you saw during COVID was basically the greatest money laundering trick of all time. £1 trillion was pumped from the government through the poor to the rich.
So sort of liquid money, hot money becomes...
So there you go. That's how it's going to probably work moving forward. You're going to see all the money being pumped through the poor and middle class to the rich people because they're essentially paying all these bills and they don't have any money left over anyway. So yeah, you can get your check from the government come in, but you've got to pay your rent, you've got to pay all your bills, and by the time you're done with that, you have nothing left, and all that money, guess what? That went to the rich, that went to the elite people and members of the society. And that's basically what this guy is pointing to. He comes out with a lot of good stuff when it comes to wealth inequality, and that's why I wanted to point to this clip here. So it's really interesting. So anyway, guys, I want to thank you so much for watching. If you've enjoyed this video, I would highly recommend that you check out this video here. And if you're looking for a VPN and also want to help support the channel, then please go to expressvpn.com expressvpn.com/marketmania. That's the VPN that I use, and it's the fastest one. And I will see you in the next one. Take care.